Ed Butowsky joins us now from Chapwood Capital Investment Management live from Dallas. Welcome back to the show, Ed. You know, Michelle was talking about this winning streak in the marketplace, and I'll take it a step back further. It's been a great year for the markets. A lot of folks have missed out on this rally. Does it continue overall?
Yeah, there's no question about it. And you're right, it's been a good year. It's actually been, a good 6 months. But there's really no reason in the world for this market to continue to rise, because earnings in the United States, the forecasted earnings are still so strong, and stock prices are so far away from those targeted prices that I still think we have at least another 8 to 10%. For the first half of this year. I think we have a very good market. I'm not happy with the economy. I heard you say a little while ago that the economy is doing better. I actually disagree. I don't think the economy is doing well at all, but stock prices are moving because stocks are inexpensive relative to expected earnings. And one more thing to add, Phil. When you see interest rates at the levels that they're at right now, stocks should actually be overvalued. So we're about 20% below where we should be. So it's not too late to get into this market. It's not too late to make some money.
All right, for the sake of our 401k plans for everybody that works here, I hope you're right. But you bring up a very good question. People like you who watch the markets and trade the markets have a bullish bias, I think, to be fair. Many of the economists that we've had on the show have a somewhat skeptical bias. What they say is this: let's wait for the next data. Let's wait to see what the Fed does. Let's wait for this. Let's wait for that. Why is there such a big disconnect between the economists, the economy, and the stock market?
Well, the U.S. economy, it used to be the U.S. economy really dictated how the S&P stocks and the Dow Jones stocks moved. But because so much of our earnings come from business outside of our borders, and Asia is doing very well, so not all of our stocks are dictated based on the earnings that they see from the United States. All right. I mean, when you see printing of money, and I wrote an article today actually about this, when you see printing of money because we need to print it because we spend so much, that devalues our currency. That should help our exports to outside of the United States as well. But for the 70% of the goods that we bring in, we basically consume 70% of what we bring in from outside of our borders, those are getting more expensive. So we really got to, you're right, the economists are disappointed and very skeptical. I am too, but stock prices are going to move higher. You don't like the economy, but you like stocks. Now, Michelle was talking about this earlier, consumer confidence. It's something that we all watch, and we say it very quickly as if we all know what we're talking about. But what does this consumer confidence number mean? Because everyone says, hey, that could affect the markets, but lately it really hasn't affected the markets. Do you care about consumer confidence? Yeah, not at all. I don't care about the consumer confidence at all. I care about investor sentiment. Because historically, when you see investor sentiment at low levels, no matter what, you go back all the way to almost every 5-year time period from 1970s forward, when investor sentiment is low, that means that has historically meant that stock prices are going to move higher. And when investor sentiment is high, you don't get really good returns. But consumer confidence doesn't mean anything. I love the answer, but let me ask you one question here. Remember a few years ago, the S&P was half of what it was. The Dow was significantly lower than what it was. They've almost doubled. Stock prices have doubled since then. And at that time, the Fed said, hey, we need to inject liquidity. QE1, QE2, to twist, and QE3. We've got a big Fed meeting coming up. What's next for the Fed, and how much do we read into whether or not QE3 continues, and what happens if it doesn't? Yeah, it's just going to continue. I mean, Bernanke has done everything he can to say, please, get your house in order, Congress. Start doing something on the fiscal side, because monetarily, I can't just keep printing $85 billion every single month. But he's going to, because he said very flat out, until we see unemployment rate at a very low level, I'm going to keep printing. Now, I'm not thinking that printing is really doing a lot. Everyone tends to think that the printing of the money is really stabilizing the stock market. I don't think so. I think it's helping to keep interest rates low, but these are real earnings on those companies. But I do believe real quick, we're out of time. Ed, I got to ask you, could Congress really mess this entire economy up? Could Congress just axe the whole thing altogether? No. Okay. Thank you very much, Ed Butowsky, joining us from Dallas. Great to have you on, as always.